Okay, for this next video, we're following the IRA contribution that John made to his traditional IRA for 2022. So in this video, we're going to discuss how to get an additional retirement tax credit for cash contributions you might have made to your retirement account during the year. So what we're going to cover is the Form 8880, right? That's necessary to include with your filing. We're going to cover kind of high level what the policy intent is behind these, and then also look at the table that covers the income phase outs based on your filing status and what the credit limits are. Okay, so the fact pattern, again, this is covered in the previous videos, but what we had was John made no contributions to his IRA during the 2022 year, but he went ahead and made it in the early part of 2023 before the deadline, and so he's allowed to retroactively apply that to the 2020 taxes. Okay, so John put in $6,000 to his traditional IRA, and so he's going to get a full deduction for that $6K because he's not covered by a retirement plan at work, and then he is going to get an additional credit for the contribution to his retirement account. So that's what we're going to address in this video. So some of the basics on this qualified retirement contribution credit and how it works. So if you make a contribution to your Roth or traditional IRA or even some other retirement accounts, so 401k plans, 403b plans, a variety of other types, if you make those contributions and you're kind of what the IRS considers a lower income taxpayer, in addition to the deduction or the exemption, you might get an additional tax credit on top of that. Okay, so in this sense, with the traditional IRA contribution, the tax credit still preserves your tax deduction. So you get the tax deduction and you get the tax credit on top of it. And the idea here, the intent is, we're trying to encourage individuals in all income groups to make contributions to retirement accounts, but this one is particularly targeted to those in the lower income tax bracket. So if we look at, let me flip over to the table really quickly so you can see what I'm referring to. But so this is a blank form. Obviously, we're going to complete this in TurboTax, but the 8880 is the form you need to include with your return to compute the credit. And what you'll find here is, as we work through the form, this is the table we're going to be referencing. So these two left-hand columns here are your AGI, your adjusted gross income. So depending on where your adjusted gross income falls will determine the factor you use, and then the factor reported here on line 9 times an amount up here is going to determine what your credit is. All right, so because you have to use your AGI, we always recommend doing this form last, right? In order to compute your AGI, you have to factor in all of your income, your deductions, and so once you have a final AGI number, then you can go ahead and compute what your retirement tax credit might be, if any, right? Now, who can't take the credit? So you're not allowed to take the credit if you're a student, if you're claimed as a dependent on another person's return, or you aren't at least 18. So there are some stipulations that you have to meet in order to be able to claim this. But for the most part, if you're a working person, you're not in school anymore, and your income falls within those ranges, you're going to be able to claim this credit. All right, so let's go back to TurboTax, and we'll start working through the return. So at this point, we've already entered the IRA contribution amount. Okay, so if we go to the deductions and credits, we have our traditional IRA contribution in there. Remember, John put in $6,000. So now we're going to look at the potential retirement tax credit. All right, so if I go down here to the retirement and investment section, you can see here the first one was traditional and Roth IRA contributions, right? We've already entered those. And so now I'm going to look at the retirement savings contribution credit section. So if I jump in here and just follow the prompts, right? So it's going to ask us a variety of questions, answer them accordingly, and then it will help us determine whether or not we get a credit and what amount. So, and again, after we do this, like the previous videos, we're going to look at the return itself and see how the forms change. So, were you a full-time student for at least 5 months during the year In John's case, no. He graduated a number of years ago. He's working full time, so he's not a student. So we're going to hit no, click continue. Let us know if you made any additional contributions to the retirement accounts, right? So no, we haven't made any other contributions apart from what was already entered. So we made a $6,000 traditional IRA contribution. We're not covered by a retirement plan at work. John doesn't have any other retirement accounts, so these will just be blank. Go ahead and click continue. Then it's asking us, did we receive any distributions from a retirement plan after 2019? So did we take any money out of those retirement accounts? And the answer is no, right? This is the first year John contributed. He hasn't pulled any money out. So, he did not have any distributions between 2019 and 2022. So we're going to leave that no, hit continue. And the software has very nicely automatically done this for us, and it says that we get a retirement savings contribution credit of $200. All right, so I'm going to hit done, and then now we're going to go look at the forms and see how all that changed on the 1040. So again, we're on the left hand side here, we're going down to the tax tools section, print center. Let this load. Going to preview the return. 2022 federal return, just the return, view and print the forms. I'll go ahead and expand this for us. So page 1 of the 1040 here, none of the income amounts changed, right, because we're just making changes to the retirement credit. But you can see up here again the wages, his investment income's down here, other income on line 8. And this is the important piece right here, right? Line 11 is his adjusted gross income, $31,796. So when we go look at the table, we'll be looking for this AGI range, right? $31,796. So let's scroll down to the 8880. Schedule C. Stock sales, crypto sales, self-employment tax. Okay, so here's our credit worksheet. Form 8880, credit for qualified retirement savings contributions. And so we're working column A, right? John is not married, so the spouse section is irrelevant. So ask us the amount of traditional or Roth IRA contributions, right? So there's our $6,000 number. Don't include any rollovers, right? That's important, right? If you have a rollover, you're not making new contributions. You're just basically rolling amounts into a different account. So we have $6,000, and then line 6 asks us, enter the smaller of line 5 or 2,000. So what they're saying here is when we figure out the factor down here, the factor can't be multiplied by a number greater than 2,000 or the lower amount of the contribution. So in this case, we put in 6,000, which is fine, but we're computing the tax credit on only $2,000. We can't do any more than that. If John made an IRA contribution of, let's say, $500 instead of $600, then the factor would be multiplied by 500, not the 2,000. So in this case, we have line 6, 2,000, and that's the amount that's reported on line 7. And then remember line 11 here, they're asking us what's the AGI. So there's our adjusted gross income, $31,796. And so now we figure out what factor we should pull to be able to multiply by that $2,000 amount. So $31,796 falls within this range here, right? 30K to 33K. And then the factor based on filing status, he's single, right? And the filing status based on that would be 0.1. So he's 0.1 is the factor, 0.1 times 2,000 is 200. That's the credit, right? Now it does say, and also a very important point here is limitation based on tax liability. So what are they after there? What they're saying here is that, okay, you get the tax credit, it's a dollar for dollar reduction in your tax liability, but if this starts to exceed the total tax liability you have, it's non-refundable. So John does get to leverage the full 200. That is a reduction to his tax liability. But if he had other credits or if he had a very, very low income and no tax liability, then he might not get to leverage the full amount of the 200, right? But in this case, he does, so that's good. So the $200 is ultimately reported up here on Schedule 3. So if I scroll up to Schedule 3, bear with me. Okay, so Schedule 3, additional credits and payments. You can see here on line 4 in Part 1, non-refundable credit, right? So line 4, we have our $200 amount. And again, it's non-refundable in that we can use it to reduce our tax liability to 0, but it can't go over that to give us a tax refund. So we got the $200 in there, that's fine. And then ultimately that number is reported up here on page 2 of the Form 1040. So right there on line 20, the amounts from Schedule 3. So his total taxes owed were $2,024. He has a $200 credit. So now the total tax liability here before the self-employment tax is $1,824. So there's the reduction. 2024, take off $200. Now he's down to $1,824, and then plus the self-employment tax. So it does help his refund quite a bit. The other thing that's important to note on Schedule 1 here in Part 2, the $6,000 traditional IRA deduction is still there, right? So we haven't reduced the amount of our traditional IRA deduction. He still gets the full $6,000 deduction, plus he gets that $200 credit. So it's a very nice tax reduction kind of technique here to make the traditional IRA contribution and to qualify for that extra retirement tax credit. All right, so that covers it. Hope that was helpful. Any questions, feel free to leave me a comment below, and I look forward to seeing you on the next one. Thanks.